Okay, quick questions. Do you know what the mortgage stress test is? Even for me, it's hard to say stress test. Do you know? Do you know the difference between a fixed rate and a variable rate? Do you know there is a government account where your savings grow completely tax-free and you can use that savings to buy your first home? If your answer is no, so this video is for you, because no one is going to explain this in a very simple way. Just remember, when you don't understand something, you make mistakes, big mistakes, and very expensive ones. So let me help you to fix this. Before we start, I need to tell you something very important. I am a real estate agent. I'm not a mortgage broker. I'm not a mortgage specialist. I'm not a financial advisor. What I share in this video is based on publicly available data, government resources, and my real experience working with buyers here in Metro Vancouver. Every single person's financial situation is different. Your number will depend on your income, your debt, your credit score, and many other things. So please, always speak with a licensed mortgage broker or a financial advisor before you make any decision. They are the expert. I'm just the person who helps you understand the big picture, because this information is really important for you to know. I'm Yaoska Climaco, your real estate guy in Metro Vancouver, and I'm a top 10 producer for EXP Realty in Canada. Sami and Mailo are probably sleeping. Oh yes, they are. So they're not gonna be part of this video too much today. Subscribe so you never miss my videos. Let's do it. Mystery number 1. This is the thing that confuses and blocks so many people. Here is how it works. Let's say a lender offers you a mortgage rate of 4%. Easy, right? You can afford 4%. No problem. Wrong. The government says, wait, we need to test you a higher number to make sure that if the rates go up, you can still pay. Right now, the rule is your mortgage rate plus 2%. So if your rate is 4%, they test you at 6%. The bank will only approve you if you can afford the mortgage at 6%. This is why so many people are shocked when they apply. Their approval number is lower than they expected. For example, at today's best rate of about 4.09%, the stress test checks you at about 6.09%. Now, the stress test also has a minimum floor of 5.25%. Whichever number is higher, 5.25% or your rate plus 2%, that is the one they're going to use. Right now, with rates where they are, it's always your rate plus 2%. This is the rule, was confirmed by OSFI, Canada's banking regulator, in January 2026. Nothing has changed. Now, here is something most people don't know. If you borrow from an ABC credit union like Vancity or Coast Capital, they are regulated by the province, not the federal government. They are not required to use the same stress test. Some of them qualify you at your actual rate, but and this is important, the rate can sometimes be higher. So you still need to compare carefully. I always call this process go fishing and have fun. Just ask and compare what's better for you. This is exactly why I always say talk to a licensed mortgage broker. They shop at multiple lenders for you at the same time and it costs you nothing. And remember, I'm a realtor, not a mortgage specialist. Please always verify this with a licensed professional for your specific situation. Fixed rate or variable rate. Let me explain this like we are 7 years old. Fixed rate, you lock in one price for your whole mortgage term, usually 5 years. If rates go up, you don't care. You are protected. You sleep at night because your payment is gonna be the same. you know exactly what you will pay every single month. Variable rate, your rate can go up or down as the Bank of Canada changes its numbers. If rates go down, you pay less. If rates go up, you pay more. Let it sink in. Right now, as today, June 2026, the best 5 years fixed rate in Canada is around 4.09%. That is confirmed by Rate Hub, one of Canada's top mortgage comparison websites as of June 1st, 2026. The Bank of Canada's overnight rate, that's the rate that moves variable mortgage, is currently at 2.25%. They held that steady as their last meeting on April 29, 2026. It was a big news. My personal observation, and this is not a financial advice, is that for first-time buyer who wants a peace of mind, a fixed rate is a very hard to argue against. You know your exact payment, no surprises, but I'm a realtor, not a mortgage advisor. Please talk to a licensed mortgage professional about what is right for your lifestyle, your income, and how much risk you are comfortable with. Mystery number 3, the down payment. How much do you really need? People think they need 20% down to buy a home. They don't. Here are the actual Government of Canada rules right now. And pay attention because this is really important. For homes up to $500,000, you need 5% down. And I'm gonna make a pause there because I know a lot of people are gonna start texting and saying, yeah, like it's possible to get a home less than $500,000 in Metro Vancouver. Let me tell you, right now as the market is, yes, it's possible. I'm working with 3 buyers right now, and we have seen properties less than $500,000. If you want to know those listings, text me or call me. All my info is in my bio, and I can get you an appointment to see those listings. Beautiful places, very good condition, less than $500,000. So it is possible in Metro Vancouver. Okay, for homes up to $500,000, you need 5% down. For the portion between $500,000 and $999,999, you need 10% on that part only. For homes of $1.5 million and over, you need 20% down. Let me give you a real example. A condo in Vancouver for $700,000, 5% on the first $500,000, that is $25,000. 10% on the next $200,000, that is $20,000. Total minimum down payment, $45,000. Easy peasy. The way I explain it, of course. Now, if your down payment is less than 20%, you also pay mortgage insurance. In Canada, that is through CMHC. And the cost is around 2.8% to 4% of your mortgage. It gets added to your mortgage. You don't usually pay it all at once. This is the good news. But here is where it gets really good, especially for first-time buyers. The FHSA, the First Home Savings Account. You can save $8,000 a year up to $40,000 total in your lifetime. You get a tax deduction when you put money in, so you can report that in your taxes. It grows tax-free inside the account. And when you take it out to buy a home, also tax-free. Each person can have their own FHSA. That is $80,000 combined, completely tax-free for you down payment. Plus the RRSP Home Buyers Plan. That lets you take up to $60,000 from your RRSP per person. For a couple, that is $120,000 more. Together, a couple can access up to $200,000. $80,000 from FHSA plus $120,000 from RRSP for their down payment. $200,000, let it land. These numbers are based on current government rule as of 2026. Individual eligibility requirements apply. You need to have never owned a home before among those other rules. Please confirm your specific situation with a mortgage professional or a financial advisor. Mystery number 4, that is Canada's National Housing Agency. About 980,000 fixed-rate mortgages are up to renewal in 2026. Here is something that is affecting a huge number of people right now in 2025 and 2026, and not enough people are talking about it. According to CMHC, after 1.2 million renewed in 2025. Why is this a big deal? Because many of those people bought their home in 2020, 2021, and 2022 when the rates were incredibly low. Some people had rates as low as 1.3% to 1.9%. Now they are renewing at today's rate around 4%. Their monthly payment could go up by hundreds of dollars a month. Hundreds of dollars. If that is you or someone you know, here's what you need to know. Since November 21st, 2024, there is a new rule. If you are renewing your mortgage and you want to switch to a new lender and you are not borrowing more money or changing your amortization, you do not have to pass the stress test again. You can just switch and shop for a better rate. So shop around, fish around, how I call it. Do not just accept whatever your current bank offers you. A mortgage broker can compare many lenders at once and it costs you nothing. And again, I'm a realtor, not a mortgage specialist. For your specific renewal situation, please talk to a licensed mortgage broker or financial advisor. Mystery number 5, the 30 years mortgage. And this is one I love sharing this because this is great news for first-time home buyers. As of December 15, 2024, confirmed by the government of Canada, first-time home buyers can now get a 30 years amortization on an insurance mortgage. Before this rule, it was only 25 years. What does that mean for you? Lower monthly payments, a longer time to pay. Yes, but it makes the monthly numbers much more manageable right now. Let me give you a real example. This is based on a $600,000 mortgage at today's best rate of about 4.09%. Over 20 years, your monthly payment is approximately $3,185. Over 30 years, your monthly payment is approximately $2,884. That is about $300 less every single month. $300 less every month. $300 a month is real money. It's grocery, it's a car payment, it's a breathing room. These are estimated based on standard Canadian mortgage calculations. Your actual payment will depend on your specific rate, your lender, your exact loan amount, and other factors. Use an online Canadian mortgage calculator or talk to a mortgage broker for your real number. Also, the government raised the cap on an insurance mortgage since December 2020. Before, if your home was over $1 million, you had to have 20% down. Now the cap is $1.5 million. This opened up more homes in Vancouver to insured financing. If this video helped you to understand mortgage a little bit better, share it. Send it to someone who is confused about buying their first home in Vancouver. This stuff should be taught in the school. It's not, so we share it ourselves. And if you want to sit down and talk about your real situation, what programs you might use, what neighbor fit your budget, what real next step looks like, message me. Link is in the description. I'm not here to rush you into anything. I'm here to help you make the right decision. Okay, let's recap the 5 mortgage mystery fast. 1. The stress test. You rate plus 2% or 5.25% floor, whichever is higher. Now, this is before you apply. 2. Fixed versus variable. Fixed give you a peace of mind. Variable can save you money if rate goes down. Talk to a mortgage broker about which is right for your situation. 3. Down payment. As low as 5% to start. Use the FHSA and RRSP RRSP program to maximize your buying power. 4. Mortgage renewals. About 980,000 mortgage renewing in 2026. Shop around, fish around. Since November 2024, you can switch lender at renewal without a new stress test. 5. 30 years amortization. Available for first-time home buyers since December 2024. Lower monthly payments, more options. Final reminder, and I really mean this, I am a real estate agent, not a mortgage specialist. Please always verify these details with a licensed mortgage broker or financial advisor for your specific situation. The rules change, the rates change, and your numbers are unique to you. And always remember, my slogan says, where there is a will, there is a home. I'm Yaoska Climaco, and see you in my next video. Bye bye!